So today we had Fed Chairman Jerome Powell giving an opening speech at the annual Jackson Hole Symposium, and let me tell you, the bulls did not like this. For example, if we take a look at the S&P 500 index ETF SPY, we see that the market pretty much sold off the minute this meeting started happening because of some of the things Jerome Powell said. Now, yesterday night in the Push and Profit private group, I said that it seems probable that the Feds will adopt a neutral stance. And I said that this is no cause for jubilation, as the hold and wait and see approach, higher for longer words, don't necessarily ignite excitement in the market, and so I think the stance is going to be neutral. And that is exactly what we ended up getting from Fed Chairman Jerome Powell today. I mean, if you take a look at the transcript for today, we see that he used the word could quite a few times in today's speech. Now, I told the Push and Profit private group last night that when the Feds leave you with a neutral position, you have to take a look at the next significant indicator, and that is going to be the PCE, Personal Consumption Expenditure report. And that report comes in just a few days on August 31st, so that's something that we significantly want to have our eyes on. But if we take a look into the price action for Tesla today, we see that at the open, we ended up kind of moving upwards all the way towards the end of the day, which means that we closed much higher than the day before. But with that said, I want to go ahead and hop into my laptop and cover some topics that we absolutely need to address in regards to Tesla stock. Alrighty, so we are officially in my laptop taking a look at Tesla stock from a 5-minute view, and as I said earlier, we did see Tesla stock close up higher, right? It was actually a green day as it closed up higher than the day before, right? So all good news. However, you know, I want to go ahead and turn our attention to the daily view, right? And I want us to take a look at something. So the concern is, I believe that there may be some more challenges for Tesla. I don't think that we're necessarily going to go back into all-time highs. And, you know, of course, I do want to emphasize before anyone gets confused. Some people may say, oh, because he's bearish in the short term, he's a Tesla bear. No, you know, I'm bullish on Tesla in the long term, but I still am bearish in the short term. I'm going to go ahead and explain further in this video how that could be possible, because I know that oftentimes confuses people. But before we even talk about that, you know, the area that I want us to pay attention to is this area around 241.05, because in the past, it's been a resistance right around over here where it got rejected, but it's also been an area of support. And so that's the area that we, you know, necessarily want to pay attention to. Now, for those of you guys that are completely new to the channel, you guys have not seen anything I've said or done before, one of the things I often do is, you know, I use this method where I take a holistic approach and I combine technical analysis with options flow and fundamentals, and I talk about the macroeconomic aspects that, you know, are important to pay attention to. And, you know, I often say that the hardest part of the research I do is not the technical. The charts, anyone could do this, right? It's really diving into the fundamentals and the macro aspects, right? Those are usually the ones where people get lost in or are not really familiar with. And so I try to use everything in confluence with each other, and that's how I go ahead and, you know, pick up these ideas where, if you guys have been following the channel, you guys know that I called out Tesla pretty much being falling down since Tesla's earnings on the 19th. And I gave my reasoning why, and I kept talking about why I was bearish for a long time. And then we ended up bouncing off exactly the 215 area that I talked about weeks ago. And I had a comment on a recent video. Someone said, yeah, right, buddy. I think the comments read, yeah, buddy, I'm sure you called that out, right, from weeks ago. And I responded to that comment by actually sending him a video I did weeks ago. And I told him the exact second to watch it, as I called out that Tesla was going to be falling down and bouncing off from the 215. Now, is this to say that I have a crystal ball and I know everything that's exactly going to happen? Absolutely not. But what I try to do is I try to tie together multiple data points to really form an idea, right? And so with that said, you know, I want us to turn our attention to SPX, which is the S&P 500 index, and I want us to look at something. So one of the things I was telling the Push and Profit private group is that the area that we absolutely want to look into is the 4,400 area, right? And I said that this is more than just a technical level. It's actually a fundamental one, and that may, you know, confuse some individuals. How can this be a fundamental one? Well, it's because it symbolizes a valuation multiple that investors are willing to pay on stocks in the S&P 500, right? So when there's a multiple expansion, that there's willingness to pay more, such as 30 or 40 times earnings. It becomes evident, right? conversely, you also hear about multiple contractions that, you know, they expand and retract during various cycles within the economy, right? And so naturally, if we're bullish, money is more freely utilized, especially when interest rates are low. Well, guess what? You know, a lot of these stocks are a little bit more speculative, and you know, of course, we see the market moving upward. People are, you know, they're easily willing to pay those higher multiples, right? But what happens when interest rates are higher, right? And yields are trending higher? Well, they're less likely to pay those higher multiples, right? And so that's something that we wanted to take a look at. And that's why I say that we want to pay attention to the overall dynamics of the macroeconomic environment. I want to show you guys this tweet real quick. But before we even talk about that, you know, I also want to point out that we're seeing somewhat of like this head and shoulders pattern with the S&P 500. So that's something that's interesting. But going back to the macroeconomic environment, I want to show this tweet. So this was from Unusual Whales. It's a great account to follow on Twitter, by the way. And they said, major U.S. department stores, including Macy's and Nordstrom, are flagging delays in store credit card repayments per routers. Now, this is a significant tweet simply because it goes along with the picture that I've been saying that, you know, consumers are pretty much struggling right now. There's different types of recessions, right? I've said this to the Push and Profit private group, and the recession that we're kind of seeing is not like the typical recession we've seen before. This is a consumer recession where we're seeing, you know, auto loans are at these high levels. People are less likely to buy new vehicles now, right? And this ties back to Tesla, right? Because if you look at it, the average rate for auto loan right now is about 7%, and that's with good credit, right? That's with excellent credit. If you have worse credit, then I mean, you know, my goodness, we have to pray for you because those car payments are ridiculous, right? And then, you know, obviously in the short term, credit cards are also, their interest rates are high. And so we're seeing, you know, this weakness in the consumer, right? In fact, if you guys have watched my previous video before, we talked about Walmart's earnings. And I know every time I talk about different earnings for different stocks, people, you know, get mad and they're like, oh, why are you talking about this? We just want to hear about Tesla. Look, it all ties in together, right? For example, for a while, I was calling out NVIDIA's earnings as a significant, earnings for the market, and we saw, let's go ahead and look at it from like a 15-minute time frame, right? The day when NVIDIA had its earnings, let's go ahead and look at Tesla, right? It was a green day for the overall market, right? And then the day after NVIDIA's earnings, we ended up seeing a lot of profit taking, right? The market pretty much sold off very heavily. It was a very difficult day, challenging, because on one end we have Tesla stock going up and then the other end going down. And then same thing with NVIDIA. We have NVIDIA doing exceptionally well and then coming downwards. And so this is why you want to pay attention to everything, right? And NVIDIA's earnings, although it doesn't have the huge weighting for the indexes like Apple and Microsoft does, it definitely shaped the direction for the market that day, right? And of course, we saw a lot of take profit before the Jackson Hole symposium, and we continue to see a lot of selling until the end of the day, where today we ended up, you know, started rebounding. But getting back on track, you know, we talked about NVIDIA, and one of the things I recently talked about was Walmart, right? I know I kind of got off tangent, but promise, it's all going to tie together, right? And what did we see from Walmart's earnings? Well, we saw that Walmart is actually doing great. And you're like, whoa, again, why are you talking about Walmart? Well, when you parse through the earnings from Walmart, one of the things you see is that the CEO is saying, well, a lot of people are coming to Walmart from Target and all these other grocery chains because they want to see value, right? People are really trying to save money. And that ties in with what we're seeing in the macroeconomic environment, where individuals are stressed financially, right? And we also heard the CEO say, you know, people are they're buying less steak and shrimp, and they're buying more chicken. So I know it sounds silly how we're talking about chicken and Tesla. But again, look, you know, the point is we're seeing consumer stress, right? Financially, I mean, people are trying to find value. People are trying to save money. And people don't do that when their pockets are full of cash. People only do that, right? Consumers, you know, tend to be more conservative when things are getting tight. And so that's why, from a macroeconomic standpoint, you know, the picture still isn't like all green going to the moon images just yet. I don't think we're there yet. And so that's why, you know, when we take a look at, you know, the SPX, not SPY. Let's look at the SPX because it's more clear to see. We see that you know, head and shoulders pattern where we could potentially start going down more, right? And then going into Tesla, you know, looking at it from a daily view, we want to pay attention to whether it's going to break above 241, because if it doesn't, well, I expect to see more of a downtrend for Tesla, right? And that's something that I know isn't going to do well with a lot of bulls, but you have to understand, look, I am bullish in Tesla myself, right? And one of the things you have to understand is just being patient. If you're a long-term investor and Tesla continues falling down, you shouldn't worry, right? One of the things I often say is you just want to buy when there's a sale, just like what you do in the grocery store, right? And so, you know, I often say you want to use, you know, identify that a reversal has happened, and you want to buy when there's confirmation of an uptrend. For example, after Tesla fell down to the 215 area and started bouncing up, what did I do for my long-term portfolio? I added more into my Tesla, right? Not saying that that's something you had to do, right? But one of the things is, as an investor, you should be joyful, especially if you're bullish on Tesla in the long term, that, you know, things are coming down. And so I hope I don't offend any of the Tesla bulls. Look, I'm right there with you guys. And if Tesla continues to fall down, well, I'm gonna do the same thing. I'm gonna wait for, you know, Tesla to sell off. I'm gonna wait for a bounce to confirm that there's more of an uptrend, and that's when I'm gonna add more into my long-term portfolio, right? It's just simple dollar cost averaging, especially as I'm fundamentally bullish on Tesla in the long term. It's just right now. I just feel like, or not feel, but looking at the data, we're seeing that there's a lot of weakness for consumers, and that's going to bleed into a lot of these corporate earnings, including Tesla, right? Now, in the short term, I always have to like really break this down, because sometimes I do get comments of people saying, again, how are you bullish and bearish? So I have a long-term portfolio where I buy Tesla, and then I have a separate trading account where I go ahead and I, you know, try to profit off the fluctuations in price going up and down. And so when Tesla's going down, of course, I try to hedge my long-term portfolio by shorting in my short-term account. Now, that's just one way to do it. There's several ways to approach the market, and that's the beauty of it, right? For example, you don't need two accounts. Maybe you're a long-term investor, and what you can do is do what Warren Buffett does. And when, you know, say he has a stock that's going down, he doesn't trade it in a short-term trading account. He takes a different approach that's similar in a sense, where he goes ahead and he sells calls and he collects the premium from, you know, a stock going down. So even if he's long on a stock, if it's going down, he could still make money while it's going down to hedge against his position. I mean, there's several ways to hedge against the market. I mean, for example, one of the ways, I'm going to go ahead and break this down in a video coming soon, is talking about the inverse ETFs. So if you have a long-term portfolio and the market's coming down, you could simply buy SQQQ, which is the inverse of QQQ. For example, if we take a look at QQQ, we see it fell down at 10. SQQQ reversed and actually went up at 10, right? So there's several different approaches. Not saying mine is the best, not saying Warren Buffett's the best, not saying this is the best. I mean, it's all to your own personal liking and whatever you see value in. And so with that said, you know, you guys should never trade or invest in whatever I say just because I say, oh, I see that there's going to be some challenges. Again, you guys need to do your own due diligence and do what you guys see best fits your plans accordingly, right? But with that said, I want to know your thoughts in the comment section below about me still slightly being bearish on Tesla in this macroeconomic environment. And also, I want to hear from your side of things. Are you guys, you know, trading Tesla? Are you guys only investing in Tesla? Because I do get individuals from different sides who, you know, some trade and invest, some only invest, some only trade. Although I say if you're trading, you should definitely also invest. But with that said, guys, hopefully you guys enjoyed this video. And with that said, I'll see you guys on this next video right over here. Take care, guys.